Welcome back. Oil prices steady today but remained near four-year lows. This as a recovery in equity markets was outweighed by recession fears exacerbated by trade conflict between the United States and China. Vandana Hari, founder of Vanda Insights, joins us now to unpack the tariff implications on oil. Thank you so much for your time, Vandana. Now, what we've been doing during this time is really comparing what is happening now to the Black Swan event of 2020 with COVID. And of course, we've seen the losses in the equity markets really equating what we saw during COVID. Are things looking similar in the oil market?
So it is legitimate, I guess, to compare it with 2020, especially since, as you just mentioned, crude prices have sunk back to lows last seen in 2021, which was the throes of the COVID pandemic.
Yeah.
But really, is it where do the similarities go from here? I think depends on whether situation in terms of the economy, economic outlook continues to worsen as much as it did when we were struck by COVID. I certainly hope not. So we see already today crude has taken a breather, as have a whole range of risk assets. Since Asian morning today, we have seen quite a bit of green ink across the markets.
Yeah.
So the big question now really is, are the markets going to be satisfied? Are they relieved that the Trump administration is going to veer this whole episode towards trade deals, compromise deals on tariffs rather than a global trade war? I think that is going to determine where crude heads from here.
Yeah, and you're absolutely right. And we're seeing quite different responses from the different regions. Some going in aggressive, like China implementing retaliatory tariffs, while others, the EU, for example, saying, you know what, maybe let's have conversations and negotiations. And if those don't work, then we will respond accordingly. I'm wondering at this point how the oil producers are looking at things, because a few days ago I saw that OPEC had said that they are going to go ahead with plans to increase production, which would then be kind of counteractive to trying to prop up oil revenues for their countries.
Yes, OPEC Plus's decision last Thursday was very surprising. It was counterintuitive. I would say almost ironic, especially if you take a look at what they gave as the reason behind the decision. They said they see a healthy demand outlook in the market. And quite ironically, that was precisely when crude was coming tumbling down as a result of all the tariff-related turmoil. So look, the market has basically been left to speculate as to why OPEC Plus took that decision. I would say there's a range of equally plausible reasons. It could be that they saw this tariff as a sort of a derailed train coming their way, and they just decided to get out of its way.
Yeah.
So, or it could be that, that the internal cohesion was at stake. And, we have been hearing a lot of tensions around, especially Kazakhstan, which has increased its production quite substantially in recent months, gone way beyond its quota. So could it be that just to sort of keep calm internally and maintain cohesion, they did that?
Yeah.
So it's up for speculation. The point, however, is that what they have done is a very minor step in terms of bringing about bearish pressure on crude.
Yeah.
Instead of putting about 138,000 barrels per day back in the market in May, they are now going to put about 400,000 barrels per day. It's a drop in the bucket, as the global demand and supply goes. I think the big bear in the room right now is really Trump's tariffs. So OPEC Plus really can't do much at this stage. It's really the ball is in Trump's court, and let's see how the administration proceeds with this.
And talking about Trump and production, of course, we know his big plans to increase oil production in the U.S. He said, drill, baby, drill. But I'm wondering how much room you can have to drill as an oil company in the U.S. if the oil price is so low. I think yesterday we even saw the U.S. Crude dipping below $60 a barrel. And I'm wondering how much incentive then that there could be for you to drill more when the prices aren't really a screaming, a dripping roast.
Absolutely. I think the drill baby, drill dream lies dead in the water at current prices. The US shale sector is quite price sensitive. As it is, over the past several years, they have been very, very careful where they spend cash. Some of the profits that they reaped in the price recovery of 23, 24, rather 22, 23, they plowed it back into paying off debt. If they were the mid-tier sort of independent producers, they rewarded shareholders with share buybacks. They have not been putting in a lot of their profits into drilling more and trying to produce more. Yeah. They're trying to increase their margins rather than their production. But, at $60 WTI, I think it reaches the pain point for the shale sector. In any case, we were expecting close to just 200 to 300,000 barrel per day year-on-year growth in U.S. oil production this year. But if prices remain around current levels, you might see it flash or even go negative.
I'm wondering then, Vandana, what you see in terms of oil's role in that bigger inflation picture, because we know that tariffs are likely to be inflationary. But, I mean, we know that a big component of that inflation is usually oil. And with these more subdued prices, could we maybe have the oil price kind of offsetting the higher levels in the other prices that are caused by tariffs? How are you looking at that inflation picture going forward?
Yeah, so in normal circumstances, or let's say we were in sort of a more normal recession or economic downturn period, softer oil prices always give the economies a leg up, right? Because they bring down inflation, they put a little more money into the pockets of people. They are inclined to spend a bit more than they would have if their the pockets were, if inflation was hurting them at a time of economic downturn. But in the current circumstances, it will help if oil prices remain at current levels or even a little bit higher, because they will tame inflation, at least the headline inflation to some extent. But, core inflation, that's important. A whole lot of other commodities and consumer durables remain, that has been a problem. A stubborn inflation has been a problem. And if Trump does go ahead with those tariffs, and worse still, if there are tit-for-tat tariffs and there's a global trade war, low oil prices are not going to provide any relief whatsoever against it. It's just too much it will be a huge wall of inflationary pressure coming down on consumers.
Well, indeed, it will be a very interesting few months and interesting negotiations between the U.S. and the other regions that are heavily impacted by the tariffs. Thank you so much for your time and those really, really great insights, Vandana. Really appreciate it. That was Vandana Hari, founder of Vanda Insights.